No, the one thing we didn't want to hear going into yesterday's Meta earnings was a metaverse moment. Remember, February 2022, Meta experienced a significant decline in their stock price. It raised $230 billion in market cap. That was just in 1 week. And still wasn't enough, right? At that time, a stubborn Mark Zuckerberg, see the arrow? That was the article there. But he was serious. You couldn't dissuade him from building the metaverse. Everyone wanted to be plugged into the metaverse. Then finally, later in the year, the stock just completely capitulated. Everyone threw in the towel. Since then, we had a heck of a run. I call it the maturation, if you will, of Mark Zuckerberg. And, listen, the rally was huge until today. In fact, today's session ranks as one of the worst ever for the stock. And I want to bring in now Spear Investment founder, also Chief Investment Officer, Ivana Delevska. And, why such a harsh reaction? It seems to me, okay, they had a big write-off. They're going to spend more money, but I thought that spending was considered investing.
Well, Charles, thanks for having me. Basically, what happened with Meta on the earnings call, people were set up positively, expecting a positive surprise because the stock had been under pressure after the Sora announcement. So the positioning was really for a big beat. They didn't deliver a big beat, and moreover, now the outlook is not looking super promising, especially given how much money they're spending, right? So investors are wondering where the returns from the AI investment.
Did he seem too cavalier when he talked about, at some point the investments will pay off? Like, one of the questions during the call was like, is this too much investment? And eventually we'll get a return on investment.
Absolutely. So there was no clear path of what are going to be the products that are going to be delivering the investments. He gave several different options, but all of them were up in the air. So I think there was no real confidence that came out of the call. And he closed the call by saying, hey, we can't be caught underinvesting. And that's not necessarily something that can give people confidence.
But this is not like that first chart I showed where, he was still pretty stubborn about the metaverse and the stock had to go completely, before he threw in the towel. This is not that same situation, is it?
I don't think it's the same situation. However, I don't think this is the best risk reward in the universe right now. I think a better place to invest is on the CapEx side.
Okay, so let's talk about that. So, companies are out there, what's the difference between a good CapEx and a Meta who's spending too much money?
So basically, everybody's spending. Some of the companies are seeing already some returns on the invested capital. So Alphabet was one example where their business was under attack, right, with ChatGPT and Perplexity and so on, and they're able to still show pretty good growth in their search business.
Yeah, I mean, here, we've got the chart here. This was considered an AI loser earlier in the year. It gapped down in February. It was dead. Everyone said, you know what, the losing search. All of a sudden, it's a juggernaut. How do they flip the script like that?
So what's been happening in search right now, Charles, is that because people are benefiting less from organic search, they have to pay on ads. So they're benefiting, so Google is benefiting on the ad side just because you're trying to place your business up on the page rather than people being able to find it organically.
Microsoft, how would you rate them?
I would say in between Meta and Google, they are still a show me story on Copilot. They launched it last year. People were projecting big numbers coming out. We haven't really seen those numbers come through yet, but Azure is doing pretty well. So I would say in between Meta and Google. We're not invested in any of the three. I think the best place to invest is on the CapEx side. It's basically the companies that are benefiting from the big numbers being spent.
Let's get to a couple of those. First, real quick, though, we've got more in the earnings coming up soon. All of a sudden, Apple's a popular name again. This iPhone 17 selling pretty well. But do they have an AI story that will keep this sustained, their rally?
So I don't think they have a AI story just yet. iPhone 17 has been selling very well, as you said. I think for investors to be able to get comfortable here, they do need to prove something on the AI side. So it's really more of a show me story.
And Amazon?
Amazon, similarly, it's a show me story on the hardware side. So they're launching their own chip, and they haven't really been able to gain a ton of traction competing with companies like NVIDIA and Broadcom. So it's going to be a question of what they're going to deliver on that side.
All right, and NVIDIA. Jensen had this amazing piece earlier, the new industrial revolution. It feels like when he gives applications, models, infrastructure, GPUs, energy, it feels like, is this the blueprint for how your portfolio should look?
Well, absolutely. And I think right now you really want to be overweight on these three. So the infrastructure, GPU, energy. And then as we get further 5+ years into the cycle, you're going to see this application start paying off. So really, this is why we're focused on the hardware side, whether it's on the GPUs, the networking side, energy generation names. I think that's really going to be where you see the near term, like 26 upside.
So Astera Labs and Arista, those are two names you still like a lot in this space.
Yep, two leaders in networking.
Right.
Arista just announced very interesting product at OCP, basically a competitor to NVLink and UA-Link. And Astera Labs has really edgy products that enable basically better usage of the energy.
Glad you came in. I don't know if you were going to come in or not, although you never told us to buy Meta. Thanks a lot. We always appreciate your expertise.